Hey, it's Tom. 2022 is going to be a good year as a Tesla investor. All doubts and critics will be squashed and the market will have to sit up and take notice of what's happening. This is how I imagine Apple investors felt like back in 2010 when Nokia was all the rage and people just didn't understand what Apple was doing to transform how we use an actual mobile. So on the 2nd of January, over a week ago now, Tesla announced both the production and delivery numbers for the final quarter, Q4 of 2021. They were, well, better than any analyst and any Tesla bull expected, coming in at 309,000 deliveries. In this video, I want to go over what that could actually mean for the earnings call at the end of the month, which will either be on the 24th or the 26th of January. Real simply put, if you assume an average selling price, ASP, of a Tesla to be $50,000, let's just use that so we can do some simple maths before I bring up my detailed model. So let's do that $50,000 times 309,000 deliveries. That comes to $15.5 billion of automotive revenue, selling cars. That on its own is 28% higher revenue than Q3, the previous quarter, which was a record-breaking quarter in itself. And that doesn't even include the energy business, which could potentially be another $1 billion of revenue. Now, if we assume a 28% margin on that revenue, which is lower than Q3, as the mix of Model S and X, which are higher value, and margin vehicles is lower, then that works out to be $4.3 billion in profit, just for one quarter. If we assume an operating margin of say 15%, only slightly higher than Q3, then that ends up with a 2.3 billion GAAP profit and over 2 billion in free cash flow just for the quarter. And like I've just mentioned, that's just one quarter of numbers. So that was a real quick and simplified numbers just to illustrate the point. But let's bring up my model and run through the summary view to come up with a bit more specific breakdown of how I believe the quarterly earnings will outturn. In the grid you see on the screen now, I've highlighted the column in a light grey to show that we're focused on Q4 2021, and I've highlighted a few key cells in green. These are the main financial indicators or numbers that Wall Street and analysts will be looking at and decoding when the earning call happens at the end of this month. First off, we know the deliveries, but they may increase up to another 0.5% after the final count has been done, so could end up at 310,000 deliveries potentially. This then flows through the model to work out how much profit that would end up being, and I'm predicting this to be around $15.7 billion. That's just from automotive or car sales and leasing, just that element of sales. If we then include energy, servicing and other revenue, that would potentially mean a total revenue for the quarter of $18 billion. The important number that analysts will be looking at next is the gross sales margin. This gets discussed as two numbers, the margin including and excluding regulatory credits. Back in the day, a couple of years ago now, it was a common news headline that Tesla wasn't profitable unless they used those regulatory credits. So everyone used to back them out and make that point. But now that's kind of gone away as, well, Tesla makes quite a bit of money without those regulatory credits at all. They just don't need them. It's free money for them. Anyway, I'm predicting a gross profit margin of around 26%. Similar to that in Q3, but ever so slightly lower. And as mentioned before, that is down to the mix of models that are being sold. Running this through and accounting for administrative, capex and other costs, I believe we'll see an operating margin close to 17% for Q4, which is just unheard of in the auto industry. Well, that's because Tesla isn't your typical auto manufacturer. They've worked hard to reduce costs in every aspect of manufacturing, and well, this proves that they are the leaders in EV production, certainly in the US and the rest of the world. There are others in China. The final numbers that will be headline news is the earnings per share, EPS. This is basically for every share you own, how much you would be entitled to if the full amount of profit was given out as a dividend, for example. Now, It's not worth Tesla giving out any of that capital as dividend to shareholders just yet, as they're able to reinvest that money at much higher rates than you and I possibly can. Tesla will therefore kindly increase those earnings for us over the next few years. And for those that are still with me, here's a little look at what my initial thoughts are for 2022 and what it could potentially bring as a Tesla investor. Number 1. I think we could see 1.65 million deliveries this year, with only 75,000 of those coming from Berlin and 85,000 of those from Austin, the 2 new factories that are set to come online imminently. These numbers are potentially even on the low side, and we could see even more upside to my numbers as the factories ramp faster than people expect. Number 2. If we include energy, this should equate to around $100 billion of revenue for the year. Number 3. The operating margin I think we might see will be 19 to 20% for the full year, with Q4 of 2022 having an operating margin over 20%. 4. This should outturn a $13 to $14 earnings per share for 2022. My guess is $13.75. That would be a growth of around 125% over this year's earnings per share. The key takeaway to really think about is that the earnings will grow by that 125% I've just mentioned, but the deliveries are only increasing by 75%. That shows how well Tesla are scaling and growing the company, utilising their operating leverage and keeping costs under control. In my next video, I'll give an update as to what this means for 2023 and my thoughts on what the share price should be in 2022 and 2023. I hope this has been interesting. If it has, drop the video a like and subscribe to the channel to see more of my content. But until next time, stay safe.